Now, the last part of this unit number 5 is principles of good corporate governance. Principles of good corporate governance. So, corporate governance has been an active subject of the academic and policy debate for quite some time in many advanced countries, particularly in US, UK, Germany, Japan. ये टॉपिक कॉर्पोरेट गवर्नेंस बहुत ही एक्टिव है एडवांस्ड कंट्रीज में. तो वी आर गोइंग टू स्टडी द मीनिंग ऑफ द टर्म कॉर्पोरेट गवर्नेंस. Corporate governance is a process or a set of systems and processes to ensure that company is managed to the best interest of all. एक कंपनी में बहुत सारे स्टेक होल्डर्स रहते हैं, इंटरनल एज वेल एज एक्सटर्नल, एंड there is a gap, there is separation of ownership and management. कंपनी के ओनर्स जो है शेयर होल्डर्स है और मैनेजमेंट जो है बोर्ड ऑफ डायरेक्टर्स है. तो शेयर होल्डर्स आर द ओनर्स, whereas the company managers are the board of directors. They will take the decision. So the management should take the decision in such a way that it should satisfy the interest of all the parties, insiders as well as outsiders. So this corporate governance is a system or processes through which the management should function in such a way that it should satisfy the interest of all the stakeholders. Inside stakeholder, internal as well as external. The internal stakeholders are promoters, members, workmen and employees, whereas external stakeholders are shareholders, customers, then lenders, dealers, then vendors, bankers, community and government and regulators. These are the external. तो मैनेजमेंट को ऐसा काम करना चाहिए जो इंटरनल और एक्सटर्नल जितने भी स्टेक होल्डर्स हैं सबके वांट्स, सबके इंटरेस्ट सेटिस्फाई होना. एवरी पर्सन, एवरी पार्टी, द इंटरेस्ट ऑफ एवरी पार्टी शुड बी सेटिस्फाइड. तो ऐसा काम करना चाहिए. तो ये कॉर्पोरेट गवर्नेंस इज डीलिंग विद द सिस्टम, हाउ द मैनेजमेंट कैन बी एबल टू सेटिस्फाई द इंटरेस्ट ऑफ ऑल द parties. तो corporate governance is concerned with the establishment of a system. तो ये corporate governance कह रहा है कि एक system बनाना है whereby the directors are entrusted with responsibility and duties in relation to the direction of the corporate affairs. कंपनी के चलने के directions को करने के लिए the establishment of some system. Then it is concerned with accountability of the person who manages it towards the stakeholders. तो ये corporate governance एक system है जहाँ पर management will become accountable towards the stakeholders. It is concerned with morals, ethics, values, parameters, conduct and behavior of the company and its management. Company और management के बीच में moral, ethics, values, parameters, conduct, behavior ये सारी चीजें define करता है corporate governance. So corporate governance is a voluntary ethical code of business enterprise. Voluntary, self-made. Nobody is enforcing from outside. Self-made ethics. And according, it is a system by which companies are directed and controlled. ये corporate governance रहने से company को direction मिलता है, controlling होती है, and the board of directors are responsible for governance of their companies. The shareholders' role in the governance is to appoint the directors and auditors. अब इसमें shareholders क्या कर सकते हैं कि directors को और auditors को appoint करेंगे to satisfy themselves that an appropriate governance structure is taken place. तो ये belief रहता है shareholders का कि we have appointed the directors, we have appointed the auditors, so the company is smoothly functioning according to the best interest of all. The concept of corporate governance hinges on the total transparency, integrity and accountability. So complete corporate governance hinges on these three. Complete transparency, everything should be clear, nothing should be hidden. Secondly, integrity as well as accountability of the management. It is a system of making management accountable to the shareholders for effective management of the companies. Through this corporate governance, the management will be made accountable for the action towards the shareholders, and it recognizes issues like maintaining continuity but succession planning, identifying opportunities, facing challenges and managing with the business allocation resources towards the right priority. In other words, running the company in the best interest of all. Best interest for all. That is the main job of the management. So corporate governance deals with laws, procedures, practices and implicit rules that determine the company's stability to take managerial decisions. So this is all about corporate governance. So the concept of corporate governance receives statutory recognition with the introduction of provisions of Companies Act. Companies Act 2013. Apart from that, SEBI, Securities and Exchange Board of India. So these acts have made this corporate governance compulsory, and fundamental institution of corporate governance in our country has been in existence for a long time. Compared to many developing countries, mechanism of corporate governance in India is much more institutionalized. But the importance of this corporate governance has increased after 1990s, after the new economic policy has been implemented. In our country, there are 6 mechanisms to ensure good corporate governance. The 6 mechanisms are there through which there should be a good corporate governance. The 6 mechanisms are, the first one, the Companies Act 2013. ये सब में पहला एक्ट है गुड कॉर्पोरेट गवर्नेंस मॉनिटर करने के लिए. Secondly, the Securities and Exchange Board of India, SEBI, 1992, and then a market for corporate control. Then fourth one is participation of block shareholders in the governance of companies. Fifth is statutory audit, and last one is code of conduct. So these 6 mechanisms are there to ensure there is good corporate governance in the companies. So the theory question will be asked, which will be normally asked in examinations from this topic, from this unit, is what are the principles of good corporate governance? What is good corporate governance? Secondly, they may ask you Marathon approach, McKinsey approach, or they can ask you comparable company approach or discounted cash flow approach. Lastly, from mergers point of view, what are mergers? What are the different types of mergers? Horizontal merger, vertical merger, and conglomerate merger. What are the advantages? What is the rationale behind mergers? These are the topics which may be asked, theory questions which may be asked from this unit. There are no practical problems which are being asked in Swani University on this unit number 5. Just to go through this theory. Apart from that, I have provided the material in the attachment. Every video, you will find the attachment. In the attachment, you will find the theory. Get the hard copy of all this theory. By going through 2-3 times, you can be able to write the complete questions in the examination. Right? So this is all about the financial management subject. Hope you can get the maximum advantage from these videos. 5 videos, which 5 units which we have covered in the subject financial management. Briefly, we will recap the points. In the first unit, it's completely theoretical. We have discussed what is the meaning of the term financial management, what are the functions of finance manager, objectives of financial management, then risk-return trade-off, time value of money. Then we have discussed agency cost, a relationship between financial management and other areas of management. These are the topics we have discussed in unit number 1, completely theoretical, no practical problems. Unit number 2, we have discussed about investment decisions. How to take the investment decision. Now, investment are of 2 types, that is long-term investments and short-term investment. Long-term investments are called capital budgeting. Short-term investments are called working capital investment policies. So here in second unit, we are concerned with capital budgeting. Evaluating a capital budgeting proposal. So there are different techniques of evaluating. Modern technique and traditional technique we have discussed, we have done the problems. Apart from that, risk analysis in capital budgeting. How to incorporate the risk in capital budgeting decisions. The important techniques are RADR, risk adjusted discount rate. Then we have certainty equivalent. Then we have probability approach, sensitivity analysis approach, decision tree approach. These are the different approaches of incorporating the risk in capital budgeting decisions. That we have discussed in unit number 2. Unit number 3 is financing decisions. From where to procure the funds. In order to take the decision from where to procure the funds, 3 topics we have discussed. leverage, capital structure, and cost of capital in unit number 3. Leverage is the technique which is used by finance manager to lift the profitability by taking the use of fixed cost and fixed financial charges which acts as levers. So 3 types of leverages we have done. So we have seen operating leverage, financial leverage, and combined leverage, and how these leverages will be helpful to finance manager. Similarly, capital structure. The combination of long-term funds, is called capital structure. So there is a relationship between capital structure and the value of the share. By making a correct combination of capital structure, the market value of share will increase. There should be a proper combination of debt and equity. If new funds are required, from where to procure the new funds? Either by issuing equity shares, preference, or debentures. And EBIT, EPS analysis, indifference point. These are the topics we have discussed in capital structure. Then cost of capital. Under cost of capital, we have seen how to calculate the specific cost of debt, KD, KP, KE, and KR, and how to combine all these 4 specific costs to find out the weighted average cost of capital, WACC. So these are the things we have discussed in unit number 3. Then unit number 4, we have current asset management and dividend policies. Current asset management, we have cash management, receivables management, inventory management, working capital management. We have done the problems on all these 4: cash management, receivables, inventory, and working capital management. Then dividend policies. In the previous sessions, we have seen the dividend policy. Dividend is that part of profit which is distributed among shareholders. A decision has to be taken how much dividend to be distributed and how much to be retained in the business. अब इसके लिए different theories are there: irrelevance theory, relevance theory, and what are the factors to be considered while declaring the dividend. These things we have done the problems also. The last unit number 5, we have corporate restructuring and good corporate governance. The corporate restructuring, again we have studied mergers, acquisitions, takeovers, then valuation of corporations, corporate valuation through comparable company method and discounted cash flow method, then value-based management to Maracon approach, McKinsey approach, and lastly we have discussed about good corporate governance. Company kaisa chalana chahiye. So these are all the complete topics we have covered in financial management. So my request to the viewers, to the subscribers, first of all, go to the attachment, take out the problems as well as theory, make a printout of all those material and keep ready before seeing any lecture. तो लेक्चर जब आप सुन रहे हैं, प्रॉब्लम्स देख रहे हैं, तो बाजू आपके क्वेश्चन रहना, क्वेश्चन पेपर प्रिंट आउट रहना, और वो उसका सॉल्यूशन मैं किस तरह बोर्ड पर सॉल्व कर रहा हूँ, किस तरह एक्सप्लेन कर रहा हूँ, उसको केयरफुली देखिए. Then you can be able to get the maximum from these videos. You can get the maximum knowledge from these videos. Otherwise, just listening without having any hard copy printout means it's waste of time. So follow my suggestions. Then you can get the maximum out of video. So students, all the best for your subject financial management. Inshallah, for other subjects in the coming videos, I'll give you the other videos of other subjects of MBA.